So I'm going to be David Dumbleby, ladies and gentlemen, and I've got some questions that have already been emailed to us, but I think what we'd like to do is there anything from the floor before we start? So any questions? Lady at the back.
Could you enlarge on what the trend is for the letting agent and the landlord, the fees that are charged by letting agents, how that's going to work in the future, because there's some talk about it changing. But what is it now? What is it likely to become?
I think I'm probably the best person to speak about that. Obviously I can't talk for individual letting agents, but I can talk about the industry. Would that be okay for you? There is a tenant letting agents earn their money from charging fees to landlords for setting up the agency, and if you're in management, a percentage each month going forward. And they also charge an amount to the tenant to set up the tenancy. The date has not been set, but it's probably going to be October 2019, probably. From that point on, letting agents will not be able to charge tenants, and likewise you landlords will not, if you privately rent your own property, i.e. you don't use a letting agent, you will not be able to charge the tenant any fees whatsoever on the start of the tenancy, even fees for referencing or anything like that. This happened in Scotland back in 2011, 2012, and again, you know the old adage of lies, damn lies, and then you've got statistics. If you read what Shelter said that rents did not go up in Scotland. My stats show that rents did go up and buck the national trend. What generally happened in Scotland is that the agents still needed to earn their money, because I'll be brutally straight with you, most of them don't actually make that much money. You think they do, but I've looked at the figures, most don't make much at all. What will probably happen is that those fees will probably be passed over to you landlords, and the rent will go up to compensate. That is my personal opinion. So you will not be out of pocket, but the tenants will be. That's my personal opinion. Does that answer your question?
I don't quite understand that part of it, because the tenant isn't going to be charged anything by the letting agent when they're looking for a tenancy, but the landlord still will.
But if you've got £1,000 property and the rent goes up to 1,050, and the fees what will happen is the fees will be charged to you as the landlord.
Yes. But why are tenants and landlords being charged fees for what basically is the same thing?
The letting agents have to earn money. Let's be straight,
so
and
being double charged for doing credit referencing.
It takes about 20 hours from a tenant applying to a property to actually moving in. A lot of people just think it's pressing a button and off you go. There's a lot of work involved, and it costs an agent probably about £600 or £700 a year to on average £600 to £700 a year in terms of actually what it costs them to run an agency per property. That's on average. And at the moment, the average fees in the UK made that an agent will earn from a property is around 900 to 1,000, of which probably 3/4 of it at the moment are earned from the landlord and 1/4 of them earned from the tenant. All of those fees will be put probably onto the landlord. That's my personal opinion.
What is it that the tenant is paying for that the landlord isn't?
It doesn't actually work that way. It's just a case of that's how the agent makes their money. Because it costs money to obviously rent rates, to have people there, check the properties, do all the legal paperwork. Remember, I'm not a letting agent. I'm just.
Yeah.
I think it's a shift between there's referencing fees that are being charged. The tenant comes in, needs to be credit checked. The change that's coming in will be a shift from the tenant paying those referencing fees really to the landlord paying it, albeit not up front. It's going to be translated into an increased rent. So the same services are being provided. It's a shift from who's paying it. The tenant currently pays it. It's now being moved to.
That's what happened in Scotland.
Yeah.
So the landlord is not out of pocket. the net figure at the end of the month will probably be roughly the same. That's economics for you. Whether you agree or disagree, well, that's just the world. At least I'm being honest. Any other questions from the floor?
Yeah, I've a number of older properties, and it's always concerned me, it's always nibbled me in the back of my head that, for instance, the stairs in one of them are open stairs, whereas, like, for public liability reasons, has always bothered me. With that going forward and regulations, are we going to see that things like that will be checked, and that you won't be able, you know, things have to be building risk compliant, so to speak, before you can rent them out?
I've got my opinion. Do you want to?
Because it does bother me. But,
Yeah.
yeah.
Would you go first?
Okay, when it actually comes down to normal occupation, as long as the property was building compliant at the time of the property being built, you're fine. Because if you think about it, every time building regulations change, everyone in the world, everyone in Britain can't move on.
Yeah.
It comes down to the reasonable test. If it's actually horribly dangerous, then there might be a point.
So there is no sort of...
And back then it may have been down to sort of design and things like that, and rules and regulations.
That's when the stairs would have gone in.
Yeah, unfortunately, as time goes on, rules and regulations sort of will change. So I think being a buy-to-let sort of landlord, I think it's just another thing that you've just got to keep your eye on, I think, just to see if things change. But
I think if you had loose carpet...
There's nothing in place at the moment legally that says those stairs don't fit the tread of what they should be now,
there's nothing
so you're liable.
Nothing that requires you to go change it effectively, to go back.
Yeah.
What will happen, I mean, if a tenant makes a complaint to the housing authority will come out and inspect. If they've got a sort of hazard test sheet they go through. If it's dangerous, they may require you to improve the property or to remove that hazard.
If you've got loose carpet and you've been negligent, then you deserve to go to prison and be locked away for years.
but then it'll be down to the inventory to make sure your property's safe, and that's the job of the letting agent. So.
Okay, thank you.
Any other questions?
When you look around the town at the moment, there's an awful lot of cranes and things building loads and loads of apartments. Do you think, bearing in mind what you said earlier about different sectors of the market, that we're in danger of going into an oversupply situation here?
There's only one place in the UK which I see a dangerous oversupply of properties, and that's E14 in Docklands. Because I work with Stephen writing his reports, and I write it for about 135 locations around the UK. The simple fact is these builders, you see the cranes, but they take years to come up, and then these builders then drip feed them out onto the market so flipping slowly that they don't actually make a huge amount of difference. Here's some numbers, but I'm talking UK here now. To keep up with general demand in terms of death rates, birth rates, people living longer, divorce, immigration, we've needed 240,000 households a year just to stand still. And the average over the last 20 years has been about 160. So we've got an awful lot of houses to build, and Chelmsford's doing its bit, so well done.
And the government put pressure on people and certain sort of cities and councils to try and sort of fulfil those housing needs. And it's just like years ago, I drive around now and I see a lot of the high rises that are being built. Well, many years ago, my family was from the East End, and it was all high rise then. That's where everybody lived and what they lived in. And as time went on, people don't like them. So you've started to see some of them that have been taken down because it's the need and what people want. They was taken down many years ago, but now you're seeing everywhere that they're starting to go up again. But because they look nice, the glass looks nice, people don't mind it. But in 20 years, when they start looking like what they did many years ago, everyone will hate them again. So it's just the government just putting pressure on people to get the properties.
So there's an income tax question here. You know, we've got properties as a family between us in various names. We were thinking about, or why we're here today, is about forming a company. You're saying that's sort of out of the question, really?
I'm not saying it's out of the question, but there's not a general answer. You can do it or you can't do it. It depends on your circumstances. You know, I've outlined the potential hurdles you've got to jump over, of which capital gains tax is probably the most serious. So you have to look at your situation and see whether it's practical. And I think it also depends on the number of properties you've got.
What is the magic number?
I don't think there is a magic number. You need to sit down and do the arithmetic, because...
You know what these sisters like, because they do charge like wounded rhinos.
No, I'm an accountant.
No, you're an accountant, sorry. No, my accountant is even worse. The best advice I can give you is this. Invest some time in yourself and make an appointment with your accountant or an accountant like
Exactly,
yes.
yeah.
But before you go, please, please, please write out what your portfolio is, what you bought them for, what they're worth now, what rent, what mortgage you've got on a nice clean piece of paper. Then write out all your other assets, what you've got before you go, and then walk in and say, that's what I've got, that's what I want, help me. Because then you'll shed loads of time and effort them asking questions, and they'll give you advice. Because you seem to be a savvy shopper, sir. You don't want to be spending money on them nasty solicitors and accountants, do you?
Well, they can help. They can help at times.
Yes.
Of course they can help. I'm going to stick up for the accountants, but I think there's a few more things you can. Well, you can take that.
I
along.
am saying go to accountants.
Yeah,
just
no,
come
you
prepared.
are. I was just going to say yes. By all means, take it along to the meeting, but even better, send it to him before you go, so he can do a bit of preparation and tell him what your plans are. Are you in it for the capital growth, or are you in it for the income? Because that will affect the decision quite a lot. As I said earlier,
purely in it to hand down properties
No,
to
but,
families.
yes,
That's
but
it.
no, that's what you want.
That's
but,
what you want
But
to
that
do.
lady mayor might want something completely different.
And
No, just he asked me. Oh.
Yeah.
Yes. So
well, I didn't
Okay.
ask you. I told you you
Okay.
needed to identify what your aims
But
were.
obviously you'd have to get the advice like they just said, but one of the reasons why some people have got a vast portfolio, and one of the reasons they may look into put into a limited company, if they're looking to do something with it, whether it's refinance, whether it's develop, whether it's buy more property, if it's just sitting there, then it's a question whether you need a limited company or not. But as I say, that's down to a tax advisor to tell you to do that.
we would
It's your
say,
reasons why.
say as a general piece of advice to anybody who's looking to incorporate anything, never do it just for tax reasons. There needs to be another reason behind it as well. Because apart from anything else, running a limited company will cost you quite a lot more in your professional fees than doing it in your own name. But just to come back to a comment you made, you said you're hanging on to them to pass on to the next generation. Well, you need to go and see your accountant anyway, or an accountant, because you're not just talking about capital gains tax and income tax, you're talking about inheritance tax, and to make an effective gift of a rental property, you need to do it at least 7 years before you die.
Good stuff. So start giving your money away.
But you've got a lot of years left ahead of you, don't worry about that.
And interestingly, if you look at the reports, coming back to your previous question, the average number of properties built in Chelmsford per year has been around 1,800, 1,900. Sorry, start again. That's the number of births. Sorry, God, dear, you lot go.
I think they're more worried about the houses than births.
Okay, the average number of births, the average number of houses built in Chelmsford over the last 5 years has been around 460, 470. But on average, 1,900 children have been born. It's on this report here, which you can get out the back here, but here's a copy for you, sir. Any other questions before we go to these ones?
Just one.
Yes?
I read recently, after 2021, you're no longer able to claim finance-related costs. Now, it didn't explain what the finance.
Well, yes,
obviously
that's right. The restriction on the relief extends to financing costs as well. So your costs in arranging the borrowings. And if you borrow to buy fixtures and things in the property, then I mean, the main focus, obviously, what most people borrow is to buy the bricks and mortar, but there are some extra things on top as well.
Just such an open statement. Really
That's the HMRC for you. Okay, our next question. This is from a lady called Hazel, and she said, I'm hoping to attend tonight. Is Hazel here tonight? No, she's not.
You should have mentioned my name.
Okay. My main question is regarding tax implication when selling a buy-to-let property that has two people on the deeds. One of our properties was purchased with a deposit loaned to my son so he could get the property, and my name also had to be included on the deeds and the mortgage, although any rents, etc., have been in my son's name. What's the tax implication when selling it?
Well, it's partly a legal question as well, but the tax liability follows whoever is the beneficial owner, and the legal owner of a property can be totally different. but it's whoever is entitled to the beneficial ownership. Now, if the legal title was yourself and your son, hopefully you've got a trust deed somewhere saying that you, the two of you, hold it for the sole benefit of your son, in which case the tax liability would all be his. Now that's what you've done in practice, because he's obviously declared all of the rental income, but ideally you need a document saying that that's what's happened. And there's a solicitor here who can do you one if you haven't got one already.
Right.
But that's what you should have.
Or,
I mean,
or
that,
just gift it when it's...
well, you don't need to gift it, because if what you're saying is you don't actually own it, do you? Your
No.
name went on the deeds to help
Yeah.
with the borrowings.
Yeah.
He is the beneficial owner. I mean, it's a very common situation where you've
Yeah.
got trusts. Years ago, I was a trustee with a client
Right.
who owned a property in London, in Camden Town, which was sold for millions. And because my name appears on the land registry, I still occasionally get letters from property developers saying, would I like to sell my property in Camden Town?
And help
I
you
wish
make
I
money.
could.
And help you
Indeed.
make money.
I wish I could, but it was never mine. So it's an important distinction with property. I'm probably
No,
stepping
you're
on
quite
your
right.
toes, Joe.
Quite right.
It's an
Don't
important
want them to be
distinction.
tax credit,
Well,
it's-
well, the practical situation is you are not the owner for tax purposes, so it shouldn't involve you. The only problem you have is if there's not enough paperwork there to support that, because the revenue will now look on details at the land registry, compare that with what goes on tax returns and say, what's gone on here?
Yeah.
You've disposed of this property, but there's nothing on your tax return. So what you should do, if you haven't got one already, you haven't sold the property yet,
No, no.
get a declaration of trust drawn up stating
Very
that,
straightforward.
yeah.
Right, okay, brilliant, thank you.
Right, okay, so got a few more questions, but I don't want to go over stuff that's already been done. Options to minimise tax changes, I think we've already touched on that.
Yeah, I mean, there's one or two things on the that were on the slides that I probably didn't mention. I mean, one, it's not a particularly attractive option, but if the borrowings are too high, consider rationalising the portfolio by selling some of the properties and paying some of your borrowings off, because yeah, that's going to incur you in a capital gains tax liability, but sorry, probably not what Stephen wants to hear if he's managing the properties, but you've at least got cash in your hand to pay your tax liability with and reduce your borrowings if the impact is significant. But the example I put up on the screen of the guy who's got an extra £20,000 of tax, I may be wrong, but I would guess that's probably the exception rather than the rule.
Good stuff. Okay, next question is, what will Brexit do to the property market?
Well, myself, that'd be sort of short and brief. If I'm honest with you, who knows? There's lots of
Yes.
talk. It's going to be in people's favour. It's not going to be. To be honest with you, my personal opinion is I'm just going to wait and see.
Yeah.
If the house prices drop, and you're a buy to let, you can either sell and sort of get out, or just stay where you are. But from my point of view, if house prices drop, that's when I'll be looking to buy and to get investment property, to buy and to create a buy to let portfolio, or looking to purchase land to be able to develop.
Joe Francis, you got a point on that?
I agree with you. I
Yeah.
think, well, you can see, I mean, it's politicians not sure they know precisely what they're doing, so it's difficult for us to know, isn't it?
I personally think Brexit is the go-to excuse for everything in this world at the moment. And I think humans don't like uncertainty, and we're almost looking for an excuse, and Brexit is that. Just whilst I was up there, I actually worked out at the last crash, property prices dropped by 19%. If they dropped by 19% from today, we would only be returning back to the levels of January 2016. And no one was complaining about those. The reason we had the property crash last time was the credit crunch, the uncertainty of those bad loans in America, and basically everyone stopped lending to each other, and it was just like a seizure. We haven't got that situation now. I've actually just written a report for you, Stephen, which you have not received yet. It's about 1,500 words long, and I've basically put out in depth my thoughts on what I think will happen to the property market in Chelmsford, in the UK in the next 5 years, and basically it's going to go up by inflation. It's not going to go up, it's not going to go down. My biggest fear is interest rates. and unemployment, not Brexit. But everyone's blaming Brexit. Just my thoughts. Has the panel seen any significant changes in rental demand for recent years, and what are their views on rental demand? I think a lot of that was covered in the presentation. Should landlords consider buying new investment properties and setting up a limited company, and how do the costs compare buying to personally? Again, we've already touched on that.
Yeah, well, again, I think it comes back to what's your long-term plan. If you're looking to hold them longer term to provide an income stream and perhaps do something of the type of thing you're talking about, which is involving the next generation, it's probably easier to make a gift of shares in a company than gift part of a property. And you can always, you'd have the same tax problems with gifting shares in a property rental company that you'll have if you gift an outright. That they don't qualify for any exemptions from capital gains tax. However, there is a route you can move shares onto the next generation by using a trust. So if that's your plan, longer term, possibly, and you're setting up a company, is the right way to go.
Okay, so let's wrap that up. We're going to start with Joe at the bottom. Joe, and then you're next, Joseph. Sorry, you're Joseph. Francis is Joe. What is your number one tip that you would wish to tell a buy-to-let landlord, or just scream at them saying, for God's sake, just do this?
Well, I touched on it. I think quite a lot of the people that I come across, with problems that I'm just trying to sort out are people who've not got a managing agent. So I think you've got good managing agents. You need to use them and take all the information you can from them to make sure when you avoid these pitfalls. Because if you come to me and we need to try and sort it all out, it's often going to have some additional expense, fines, these sorts of things that are involved. So my number one tip is to use very good managing agent. Right?
Good stuff. Francis, number one tip.
Well, I'm going to say this, aren't I? Use an accountant.
Hey!
When you set up, go and see an accountant. Get it right. We're very happy to sort out the muddle after you've got yourself into it, but we'd much rather advise you the right way to do it in the first place, in conjunction with your managing agent.
I'm more in the sort of land development and building new builds and things like that, but when it comes down to buy-to-lets or anything to do with property, you should be working with the right letting agent, and so they can manage the property for you, because I hear it all of the time, and we buy portfolios of people that people are tired, they're fed up with people wrecking their house. I've heard of cannabis farms, I've heard of all sorts. At the end of the day, is that your job? If that's not your job, you're better off paying somebody to do that. Let a professional do what they're good at, and you concentrate on what you do. And that's exactly what I do. I don't do any jobs that I'm not very good at. If you ask me about percentages we pay on mortgages and things like that, I wouldn't be able to tell you, but I can show you a spreadsheet that does, because that's not my department. So.
Good stuff. And Steve, please come on and say your final piece. Thank you very much.
Yeah. No, thank you very much, Chris.
Cheers, mate.
It's been really good. Thank you very much. I hope it's been useful and you've learned something from tonight. It's been an eye-opener for all of us. As I said, I will send the slides out if you want to. As Chris said, Emma and I are available. We're happy to look at your portfolio and your yields, give you a current valuation as well. We do sales as well. We've done for a few years now.
Lovely.
Have a safe trip home.
Got some more horses due for us?
Yep. Please help yourself.
If you don't eat, it's not a problem at all, because I'm based here all week. Every time there's an event, it's great. So.
Cheers, guys. Thank you very much, everyone.